Hi traders, Fawad Razakzada here, market analyst with FOREX.com, and crude oil prices continue to dictate market direction. Now, oil prices were up around 3% at the time of this recording. They're continuing to find support from yesterday as traders are forced to price out the prior optimism over a speedy resolution to reopen the Strait of Hormuz. Now, with the two sides still far apart, a quick resolution looks unlikely, and that's been reflected in other markets as well, finding some pressure. For example, currencies of oil importing nations, as well as European stock markets, which are sensitive to the situation in the Middle East. Let's get into it. Looking at WTI here, you can see that prices have broken the bearish trend line that was created from the recent lower highs. With that broken, we now have a confirmed technical signal to suggest that the bullish trend on the oil contract has resumed higher. Prices have already broken lots of resistance levels on the way up, including the $97 to $98 area, which was previously support and resistance. As you can see on this chart, that area could now turn into support on any short-term dips. So watch out for a potential bounce should oil prices come back down to this region. On the upside, the next key level of resistance, or potential resistance I should say, comes in at around that $100 per barrel, which is going to be a significant level for oil. And if we can see a break above that, then that could open the way for further technical buying above it towards the 102, possibly rising towards the 105 area in the days to come. Now, for as long as the stalemate continues and the two sides don't start talking again, the pressure in the physical market is going to remain intense, and that's going to put upward pressure on oil prices. And for that reason, I cannot rule out, for example, WTI rising to the range highs of near $110 per barrel, with higher prices also likely, such as 115 or even 120, if the situation continues to drag on. As a result of the renewed rise in oil prices, we've seen the German DAX index come under renewed pressure in recent days. It's broken some key short-term levels, including the 24,500 level, and it's also taken out the trend line as well. Key support now being tested at around 24,000, but the key line in the sand is this most recent low at 23,845. Should the German DAX break through that level, then at that point, all the bullish signals that we had been getting in recent trade will become invalidated. So watch out for a potential break below that level in the next couple of days or so. On the upside now, 24,500 is the first level of resistance, followed by 24,750 levels that were previously support and resistance. Now, precious metals have been on the rise in recent days, but yesterday we saw a big rally in silver, while gold only managed a small gain, as you can see over here. The rise, or the renewed rise in oil prices, is undermining that rally in precious metals. Today, both metals are down. And for gold, the key question is, will it hold above this level of support at 4,660? This has been a pivotal short-term level, as you can see by the wicks of these candles. Now, if gold were to break below that 4,660 level, this would be quite bearish. And in that case, I think 4,500 could at least be retested, and we could then see further technical selling if that level breaks. On the upside, 4,840 to 4,890 range is a key area of resistance. We've seen the previous rally stall around that area, and this time we could see another similar scenario. But in truth, a lot now depends on the direction of oil prices, so watch the developments or lack thereof between the US and Iran closely in the days ahead, which should continue to be the primary driver behind all risk assets, including equities, gold, and other financial markets as well. Now, for more market updates and insights, head over to the news and analysis section of our website, FOREX.com. I will see you in the next one. Take care.